Good evening, all. Ira Epstein with your SPDR ETF market wrap-up, and this wrap-up is for Monday, the 27th of June, 2022. So as we look at the market, it was sort of a quiet day. Volume was on the lighter side today. It's the last full week of trading, remember that, before we get into the 4th of July holiday, a week from today. Markets won't be open then. We saw Nike sales, some numbers were beating, and the market was up a little bit. JP Morgan announcing another buyback and a dividend. Obviously, after the stress test, you'll see other banks doing the same with that. News today, Robinhood. Maybe FTX was interested in them, and then FTX came late in the day. That's the crypto exchange, said no. They have not had talks with Robinhood about acquiring them. So you get the rumor mill. But where there's rumors, sometimes there's fire. You know, if they take away of getting paid, like has been the practice in the stock market for payment for order flow, if that goes away, some of these companies are going to have a difficult time, Robinhood being a standout big name of that, because that's where they receive a lot of the revenue. How are they going to make money to replace that becomes the big question, and that's the takeover idea. But as you can see behind me, it's a lot of red. There's a share of green, but mostly in the red sectors today, so we're getting a bit of a correction. When we look at Chewy, I think today was the day where the market got into this resistance point right here, and that should probably be a near-term cap. I'd be very, very cautious about this market extending a lot further on this particular run. The trend has been up since basically when we started covering it, and it's done its job. It's run through some key averages. You also had a bullish crossover where the 18-day average of closes did get over the 50-day moving average today. That's a friendly sign. But you're over the Bollinger Band 3 days or so in a row here. You're getting a bit rich in price and you're getting overbought. Now, will you embed? In order to embed, both numbers have to convert themselves by staying over 80 at least 3 days. If we take a look, you certainly have today. You had yesterday. Did you have the day before? No. So you need tomorrow, and that's one of the reasons that I think the market's going to give up something. I could be very wrong on that, but I'm looking at the market as wanting to maybe not embed so you can get a pullback from there. Obviously, when you clear the 100-day average in a Bollinger Band, that's the resistance point. Staying over it, you could easily fall right back under it. And support doesn't materialize for another $6, $7 or so to the downside. AMC, right back to the top part of the upper Bollinger Band. What's the importance of that? Let me explain this as best as I can. Markets will trade within Bollinger Bands 95% of the time. So when a market gets up to it, it's where the traders are getting the most bullish, but you're only going to settle over that 5% of the time. Can you follow through? You could, but more times than not, if you do your homework, if you drop to the bottom, you can run against the band. You don't stay outside of it. Same thing here, and here. You can do your own work. I proved this in my enhanced Bollinger Band course, and it's something I watched. Now, in the end, I said to you before that I think this market should be basing out and trying to move up as we're in the summer months, and this is when the cash flow in a movie theater business picks up and they're going to look their very best. It doesn't hurt that Maverick was $1 billion franchise now, as you can see, how the market has just jumped away with that. So this is all good news for it. I want to see this. I want to see more Jurassic Parks and the other movies do well. You know, we all like going to movie theaters. The problem is the business model. It's a rough one. But if you can clear this, maybe you get to the 100-day average. We'll take another look. But I certainly would never tell a trader to buy long into or over a Bollinger Band. In Apple, all I keep reading, and all the tech guides, because I'm a techie guy and I do read that stuff, is all the new features of the new Apple, 14 that is coming out, and how it's going to work, and sizes of the phones, and which ones are going to get what in terms of battery life and so on. Okay, but that's what's helping move the stock up, because there's a big demand for that phone. They had to scale back how many there'll be. You know there's going to be a price increase. The question is how much are they going to be able to do? But today, you know, you buy these phones, they're $1,000 blindfolded. In Disney, the market has recovered a little bit, and I've been looking for that. You can see how you lost the embedded reading. Let's go back and take a look at this if we could. So here's both numbers, not under 20. If I come back to Friday, they weren't under 20 either, right? So the market prior to that, day one, both numbers under 20. Day two, day three, I can go further back. They were embedded. And then you lost that. When you lose it, the time to come out, the way that I teach charting, is at the first close over 21. This would have been very close and a big warning signal. This market's probably going to get back up to that number. Let me come back here and get you up to date with it. And as you can see, while you closed down today, you're over 21. As far as I'm concerned, price and the 18-day average are going to come together. The market, it's time to no longer be short the way that I teach charting. Let's go to the next chart, XLF. Here too you had lost the embedded reading, and that often means a challenge of the 18-day average. That's what the market is certainly trying to get done. XLI, you had an embedded reading that you lost. Let me walk you right through that one too. Keep coming. All righty. And now you can see both numbers under 20, next day under 20, next day under 20, and then you lose it right here at 22. That should mean a challenge the way that I teach in my charting course, my enhanced Bollinger Band course, that this market should try to make a run to the 18-day average of closes. I think it will happen over the next few days. XSD, the semiconductors, correcting an oversold condition, could make its run there. I know we might as well go through the exercise. Did it embed? So as we come back together, if I can get this to do that, come on. Will it help me or not? There we go. Let's see with the first day that both numbers were under 20, and you'll see there's 4 of them at least. Day 1, 2, 3, right? 4. Now, if you get a number that's over 21 on a close, you want to be out because the odds favor that the market's going to make a run to the 18-day average of closes. And today the market's trying to make that run, as you can see. Okay? I do think that will happen. We'll see if I'm right or wrong. In the home builders, an oversold market that's getting a bounce. And, it's interesting. If you looked at pending home sales today, they were way beyond what people think. So, as I told you, I have been driving around my own neighborhood looking at for sale signs, but I'm also seeing a lot of contract pending signs. So people that want to buy, this is, the end of June, they're buying now. They want to get their kids in the school systems, so on and so forth. A lot of that is taking place. In the energy sector, you have an embedded reading. So the rally should be capped until the red line closes over 21. I look for the market still to have resistance about $3-4 higher at 77.22. It need not get that high. With an embedded reading, you can just start slipping at any point if, and that's a big if the market wants to nosedive, then the 67.55 to 68.08 level, the 200-day average is in play. I really have doubts the market's going to go down there. You have an OPEC meeting this week. OPEC has already come out and said that they don't see the market excesses being the way they were. They're looking for the market to get tighter now as we go into the second part of the year. That's generally a sign that OPEC might say, maybe we got to consider what we're doing. Should we give more oil? Should we just keep where we're at? At the end of the day, they want to get the most they can from it. That's their goal. GLD, still acting bearish, a lot of resistance, 18 and 200-day average, but support. Hit 168.51, I think the bears will disappear like that on you. I have been telling traders I like the short side, but I have also told them to take in some money here, and a lot of them did that if they're in my subscriber videos. GDX, down to the lower band. You hit a downside target. Does not mean that the trend is over, but you've hit your target. It's generally when that happens and you're oversold, the smart money says, I'll deploy money elsewhere. This doesn't make sense right now. Copper, is it going to lose its embedded reading? Now, The importance of that would be the red line closing over 21. Until that occurs, a pop tomorrow, if you get it, it's most likely going to be sold by the market to see if there's anything left to the downside. That's just a chart. I got my dithers about wanting to be short copper or short XME. If you're ever going to get a bounce because China releases its COVID in some way, that'll be the markets that show it to you. It hasn't yet. Number two, I'm bothered by the fact that recession worldwide takes demand away from copper. So, as a chartist, yeah, it's probably worth the probe on the short side to see if there's anything to that. If the market loses the embedded reading, then I'll look wherever the 18-day average is for the market to get back there. In AGG, when you lost the embedded reading right here, you made your run to the 18-day average. That's what I'm telling you I see on so many of the markets we've just covered together. And in UUP, overbought condition that's corrected and you've gone back to the 18-day average. So this is the zone that I'm going to look for the market to try to find its first support level, and this is the resistance level. It's the flip-flop in the euro as that has come up to the 18-day average. Now they've got to tell us, are they going to trend? Were this going up, the dollar going down, or was this just a correction and we get some more noise and start chopping around as the week progresses? Too hard to tell. From what I'm seeing right now on this, so I'd be very, very cautious with it just because I'm not seeing anything. Let's talk about Bollinger Bands because we're doing that together. And in the Bollinger Bands, the way that I'm looking at it, if you learn how to work with them, you'll discover that momentum often, I wish I could tell you it's always, often goes ahead of price. Therefore, when you learn to work with it the way that I teach, you not only get the benefit of understanding the support, but if you lose an embedded reading like you did up here and the market starts down, you have the edge. You have an idea that it's going to happen before price does it. How do you learn more about it? It's simple. On our website, under the Enhanced Bollinger Band course, it's there. But why don't you do this? Take a look at this little ad I put together on Bollinger Bands. Welcome. I'm Ira Epstein, and I'm here to talk about my Enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.